Hi guys, welcome. We had a big week. We had a turn date on Monday and we had a turn date on Friday, and boy oh boy did we sell, and we actually managed to get some nice puts after absolutely slaying this market as of late. So now what? Well, I did say I expect a pullback early August. We sure got one. The question is now, listen to me. Had the lady who publishes the NFP report continued putting out fluff numbers, would we have sold? That's the main question here. Would we have sold? Anybody with a brain understands, unless you're hard conspiracy, that it wasn't the whole I'm sending nukes. That's just ridiculous, right? And for anybody to say we're prepared for nuclear war, it's like even the Russians came out and said, hey, maybe you need to cool your jets, bro. Like, what are you talking about? So that's not it. Tariffs, sure. So if all of these numbers have been fluff ever since here, and every Friday, end of the month, we've ripped on NFP reports that have all been revised down, and that's what the market's going off of, we should be down here, and we will probably come and just absolutely crash. However, let's be smart here. The question now becomes, if that is the bottom of the collar, 58.50, that is a perfect fib retracement from this high. The question now becomes, can you get down to, yes, there we are, our old box. Can we get down here and back up here in this short amount of time? Is it doable? Quarter ends you certainly can. So we got to change our trading a little bit. We have to react and play off the levels. It is obviously clear that volatility is picking up. We know that it's not going to go up here. That doesn't mean that it can't go up here. It's all over the place. So it becomes even more important to day trade and scalp, because you can't, even if you want, swing this unless you're like, you have nailed and bought puts a couple weeks out here, then yes. But as you saw, we had puts, stopped out of puts, grabbed that. I was in 3 straddles. I don't even know when I've been in 3 straddles. Basically, that's, you're at a point, no one knows where it's gonna go short term. You buy calls, puts, put a stop, -20 on them, and see who wins. I mean, even this candle was a 94% trade. This was, I think, 150, 200 something. These puts paid as well. So you see here, this line. This is why I'm talking levels here. This line here, I've had for, I don't even know how long. I've been racking my brain trying to figure out why I marked that spot. But I put it in at some point. But the point here is, I was trading against it here and here. So that's a level. That's why I've marked it in that color. It's significant. Underneath that, well, then you gotta establish, is it a fake breakdown? You start selling here more on Monday. I've got that as my next level, plus the Bollinger. Under that, it's the daily 50. Okay, under that, under the daily 50, you're going to the gap. Under that, you're going to gap fill. Under that, you got this week here, and then our old target of 59.15 and the 200. Do I think we go more than that? If we quickly get down here, I'll start entertaining hitting our old box, which is also the JPM collar. So that's why I'm asking this question. We haven't hit this and we haven't hit this. I also have a few fractals that show me all-time high in September. So that is the reason why I'm kind of I want to see, like, have we picked a new direction? If so, short the pops. But are you ready? What I'm having an issue with is this. This is the weekly NAMO. It is low. I would not be surprised if this is merely a pullback, because you have Meta, Microsoft and Nvidia, who are market leaders, hitting all-time high. Meanwhile, the NAMO's RSI is now lower than during the April crash. The RSI. The NAMO itself has a little bit to go, but remember, once we got a bottom here, this thing reversed and it was no joke. Same thing with the sports calendar. We never got this. So I always look at seasonality charts and try to identify which one we've switched with. And it looks like this. We had that high, we're selling, we're gonna bounce early, sell again, and then chop until the end of August, and indeed put in a new all-time high in September. I've been talking about this all-time high in September that no one is gonna see coming. And what would that be? You already know it, but I'm just gonna point it out to you. So I think that it looks something like this, right? People think that they are going to cut, and they won't. But we will near the end of Powell's term, and they will probably cut here, and we'll have a rally. So I would not be surprised if the market front runs a fake out in September. Okay, now back to short term. Look for a bounce, and it might come this week, and it will probably be, if not this week, into the full moon. So you got a full moon on the 8th, I believe. This week's Friday. So let's say we chop around, here midweek, look for a breakdown that looks absolutely atrocious, like really bad. I'll be obviously I don't have the NAMO real time, it updates after hours, but my plan, if we sell Monday, is to probably start buying some calls in the money if we're respecting levels. I'm also on the watch here for, you know, some new Labor Department name to come out like early in the week, okay? But that's not the big catalyst. The big catalyst is August 12th, which is next week's Tuesday. That is China's last day to make a tariff deal. That's straight from Scott Bessent. Clearly, forget about the India trade deal. It ain't happening. Why is it not happening? Well, Trump said, oh, I think India is going to stop buying oil from Russia. They're like, no, dude. India, China, and Russia, they're all neighbors. They're in BRICS. They can wait this thing out. Okay? That's it. It's done. So the question is, will China play ball? Also, when do you buy the dip? Right? Is it straightforward? You just look at the stove? No. I'm talking about something like this week. Trying to catch a hammer that most likely will not go anywhere, because then you can really fall out the sky. The reason I'm saying that is, yes, that's the stove. I use that for day trading. But look at the MACD. Unless this cell that we have is something like this and it looks bigger, you're in trouble. So worst case scenario, absolute worst case scenario, now we're on the weekly. Where are we? We are here. So another thing is, when's the last time we had a bearish engulfing candle? Here, right where the collar is. So best case scenario, we're doing this, but this candle looks bigger, so we got to go back, and worst case scenario, it's this. We had the same candle when the previous top happened in February. Okay, except all the readings were a little bit worse, so we got plenty of room here. So what's the point? The point is, we need to catch extremes when they happen. How do you catch an extreme reading? Okay, first of all, you got to be watching the Bollinger Band. That's it. Here is a perfect example. A complete bar outside, right? So this trend line here, what is this trend line? This is not random at all. So our all-time high is a rejection of that trend line. What is that trend line? I will show you. You're gonna laugh. That trend line here. This trend line, sorry, wrong trend line. No, right trend line. This trend line that we just rejected is the October 23 low. It is also the August bottom from last year. And now the top. Major trend line. Okay? Same thing. Once we broke that in March, we were gone. So with volatility picking up right now, but Nasdaq looking like that, what do I think this is? I think this is a huge operation, especially with a bullish MOC into close, to drain money from this and stick it into the Nasdaq. Okay? As far as banks, look, we haven't even, I said JPM's going to 280. If it holds 280, it's gonna hold the Bollinger, it's gonna hold the 50. If JPM starts selling from here, it's going down to 265. And then it'll fill this here, okay? So then you can ask yourself, what is this? Is this a cup? Yes, pull back, got the handle. What happens now? Worst case scenario, you make a huge W, but I don't think that's gonna happen. So Then you gotta ask yourself, after this China deal next week, hopefully, or the week after that, what's the carrot for the market? What's the carrot? Is it a Fed cut? I mean, they're gonna drag this out. They already told you quantum's gonna be huge, right? Fantastic. Big earnings week. Palantir, HIMS, Industrials, SMCI, AMD, Snap, Upstart, Uber, Shopify, Oscar, IONQ, App, Qubits, TTD, McDonald's. Gonna be a lot of opportunity, so we'll be looking out for ghosts. Please play them and post them, obviously. Now, again, same setup. Would be pretty sweet to be sitting in some puts, but they were also, you know, we caught the move up. I mean, that was the best move of the week. We said a week ago we'd buy calls, we bought them, we banked, it was nice. We have a ghost down to 6.95. Once it hits, I will buy it. If the market sells, this is my favorite short still. We put in all-time highs on Nvidia as well. It's still holding the previous high. If this sells, it'll probably go down to here, and that'll bring the market down. But I mean, again, yeah, this will likely never see this ever again. Not with how things are going. SMCI earnings. Problem here is it trades pretty shit on earnings. It's had 2 misses in a row, and that's from this level here, and now it's there. So if it's good, this will squeeze. If it's shit, it won't. Avgo, I already told you, I'm doing what I did with Meta on these into earnings. Especially with a near match from last earnings. However, last time it pulled back, I don't think it does that again, but I will buy this into its earnings, but that's not for a while. What else will I be looking at? Qubits. I mean, again, it's kind of gonna be make it or break it. It still held the gap open from last earnings, and it's held the range. This would be a perfect opportunity to push it higher. Rocket had really nice earnings. It's still bull flagging. No reason for it not to push higher. Hood. It is very apparent that Hood has taken most of Coinbase's business, because I mean, god damn, this is gross. That's a perfect top candle again. Gotta keep an eye out for those top candles. That is disgusting. Not gonna touch it. Also, MSTR. One of the chief officers has sold all of his shares. All of them. What I don't like about Hood is that they put Vlad at all-time highs on the cover of Forbes. And that's always, whether it's MSTR, whether it was that FTX guy, I mean, that always means a pullback. But at some point, here's the thing, the indices, even if the indices pull back, right, and they have a pullback, these stocks in particular. I mean, look at where Hood was in April. 29. So if you're waiting, if the market starts selling and you want to buy some good shit for end of the year, I'd wait for these names that have been really strong after April and load them, you know, for Q4. Because they will have the biggest pullbacks percent-wise, and they will also go again. Okay? Palantir didn't, I mean, they got their contract. And again, just look at the chart here and compare it to, let's say, Nvidia. It's the same chart. This is where they see the future. This earnings is going to be very, very interesting. If it sells, are they going to buy the dip on it? 100%. Absolutely. They just got a $10 billion army contract. Last week, a lot of the boys wanted to buy Tesla. I pointed out these Head and Shoulders. What happens with the Head and Shoulders? Okay, you know how I like to play the inverted Head and Shoulders. If you identify Head and Shoulders, you can always short it back down. But not only that, you can then try to catch it once it's done the move. So Tesla on watch next week. I don't even know what to say about this besides I ain't fucking touching it. I mean, this is like ridiculous already. And that's kind of my thoughts going into it. I'll be scalping. I don't think I'll be swinging unless we have a strong Monday, or I'm looking for a bottom either Monday, Tuesday for a bounce into the full moon. Gonna have to keep an eye on the news cycle. What's the narrative? You know how it goes. Because if you hadn't figured it out yet, now the market has changed. There's cracks. There's not only cracks in the whole movement that brought this here. We feel that half moon fast and we're under it, right? So the only thing, and another thing here, the initial move above this FOMC was up. So usually that means by the next FOMC meeting we should be above it, and that kind of goes back to where I started this market analysis with, is a all-time high in September that is sold pretty drastically. That would put us at the top of the collar. The question is, do we go to the bottom of the collar first? And there's plenty of bounce spots, and you know me, you know, when we, even in April, let's go back to April here. Even in April, when we were just shitting from the skies, we made some really nice money because it's never a straight line down. Okay, they don't want people just to be. It's very hard to time these things. Where are we? 23. Let's not be 23. The point being, even in a cell, let's get rid of that one. Even in a cell here, you get these super squeezes, right? You get these nice squeezes. Obviously, that day will never happen again. But once the volatility expands, and I've showed you post the volatility expansion chart. That's happening too. So let's go over the GICs. And usually when I play SPX, right, I will pretty much follow GICs, match it to the chart, right? And I will probably this week be playing a lot of SPX. And when I do, I don't unless it's in the beginning of the day. I like to focus on it, so I might jump off of voice but as you know, I posted in the chat what I'm looking at. And obviously if it's not your cup of tea, don't play because it's expensive and very volatile. However, these intraday moves are really nice and pay nice, right? And it was good against this level that I had marked. But end of the day, it can be really messy. Like, I should have sold all of my contracts when they ran 94% on this candle, but I left some runners, you know, and contracts go from 600 to 0 in 2 minutes, so that sucks. But these moves are really nice. So with volatility expansion, I don't know if I'm going to be playing a lot of individuals this week, but anyways, back to the GEX and all of this. You got some pretty crazy readings. It'll update, but I'm just going to show you next week's Fridays. So we are right here. There's a big GEX at 625. You could get to that 633 level. You could even see 610 easy. The biggest GEX for next Friday somehow is 645, and there's zero chance that we get past 650. So we'll wait for that to update early in the week. When we go closer to, you know, if we start going out here a little bit, it looks pretty volatile because of the range expansion. And here you can see you have 633, you have a bunch of prints there. I would be very surprised if we get over that this week, unless it's a gap up. But if we figure out a bottom, whether here you see this candle from July 16th, right? If we keep holding that, and I've said I didn't want a third try of it. See that July 16th candle, I didn't want a third try at this level, because we'll go through. The thing that's throwing me off, which is why my theory about that they are going to beef up the Nasdaq severely probably is true, is the fact that this is only the first test of this level by the Nasdaq. Okay, hopefully this is informative to you, and I will see you on Monday. Gotta really pick our spots because of range expansion. What does that mean? That means contracts are gonna cost more and it's going to be more volatile to play. God bless.